What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we had a very bullish day in the stock market across the board. First up, we'll take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did go up over 1%, and again we failed to close back above that 20 simple moving average. That level is right around 416, and it's still acting as resistance. Remember, there's no defined trend for the bears and the bulls, and all of the price action we're witnessing is extremely critical. So the fact that the price action cannot get back above that 20 simple moving average is a concern. The number one thing I would watch for on SPY going into tomorrow's trading session is to see how the price action behaves at this 20 simple moving average. If it just can't seem to crack above this level, that will be a very early warning sign that there could be another wave of selling coming. So watch that level very closely at 416 on SPY and see if that level is going to continue to be a strong resistance level. Don't forget, we still do have a small gap above right around 417.8 that has yet to be filled. But in order to fill that gap, we need to break through resistance, and then we can start talking about price targets above around 420 and higher. But right now, we need to see price action back over that 20 simple moving average. If that level acts as resistance and the bulls can't break through it, look out below, because we could be coming all the way back down to retest 412. Remember, 412 is that critical support level. As long as we're above 412, we can start to see more bullish developments in SPY. The longer we stay below 412, we're more than likely going to see the market start breaking down and going much lower. So below 412, we have a gap to fill right around 411, and we do have a support trend line below that's going to be right around $409. The critical support below the trend line is right around the 50 EMA, which is right around 407.50. There is a ton of support on SPY anywhere between 409 and all the way down to 406. So if the bears can crack down through these support levels, that's going to be a lookout below warning, because we could start to see a massive wave of selling. So watch critical support levels all the way from the 409 support all the way down to the 406 support. And if that level does break down, we will likely not only close the gap, but continue to go much lower. We have a gap to fill at 400 and a critical support level at 398. And below 398, we're more than likely going into a bear market. So this is a very critical moment in the stock market, and that's why that 416 resistance level is so important. Remember that there's not a lot of strong trending in this market, so the price action breaking down through these critical support levels or breaking above the critical resistance levels is going to help us figure out which direction this market wants to go. So remember, if you're not sure what to do in this market, you're better off just sitting on the sidelines until there's a decisive trend back in this market. Right now, there's going to continue to be volatility, and there's really no decisive trend in either direction. So you need to watch these critical levels, because they are the most important thing to pay attention to. On the Nasdaq 100 Triple Qs ETF, we went up over 1.9% today, and we did close back above the 50 EMA. However, we are still trading below a negatively sloping 20 simple moving average, which is right around 330.5. Remember, this market is not trending for the bears or the bulls, and right now this could be another one of those critical resistance levels, just like SPY 416. So if the triple Qs can't break above 330.5 and we start to see massive selling off of that level, look out below, because we're coming all the way back down to our support levels below. We do have critical support at 326 and 322, and the 322 level is the equivalent of SPY 412. For the bulls on the triple Qs, they need to stay above 322, and for the bears, they need to stay down below 330.5. So your critical lines in the sand for the triple Qs ETF are the 330.5 resistance and the 322 support. Below 322, things start looking a lot weaker, and the bears could start driving the triple Qs lower. We do have a support trend line right around 319, and our critical support level, which it does look like we double bottomed off of, is right around 316. We have a gap to fill at 315, and below there we could be going all the way back down into the low 300s. So remember, there's no critical trend, and the price action is literally trading below a critical resistance and above a critical support. When you have price actions sitting between two critical levels, you don't want to make any assumptions in either direction. Like I always say, be objective and let the price action do all of the talking, and we still need more time to see which direction the price action is going to try to break out of. Remember that on a breakout of either level, a daily close above or below that level is the warning sign. The second close above or below that level is the confirmation. So right now we are in no man's land, and it's going to continue to be choppy and volatile. So don't expect this market to come easy until we see a decisive trend returning. On the Dow Jones, we closed right at resistance, yet again, sitting right on that 20 simple moving average right around 341.5. Again, just like with the triple Qs and the SPY, we are at critical resistance levels, and we're trading above critical support. So all three indices are just kind of sitting out in that chop city zone, where they could chop between support and resistance and continue to confuse both bears and bulls alike. So on the Dow Jones, the bulls need a price action break back above 341.6, and there will be a gap to fill above right around 347.5. The critical downside support is going to be the 50 EMA right around 335.5, and if that level breaks down, we're likely going to fill the gap below at 331.5. On the Russell 2000, we went up 0.67% today and closed right at that resistance level. Remember the support trend line we broke down below yesterday, and today we're now closing right at that level as resistance. We still have critical support levels below at 215 and 209, but we also have critical resistance just above right where we closed at 219.5 and that 50 EMA right around 220.7. The 20 simple moving average for the Russell 2000 is up here at 222. So just like the other indices, we can see the Russell 2000 is also trading below critical resistance and above critical support. However, you can see the Russell 2000 is starting to look weaker, and these moving averages are actually starting to stack to the bear side. If we start seeing price action breaking down below 215, that will be a huge warning sign to get out because we could be going much lower. Remember, as soon as this 20 simple moving average crosses back below the 50 EMA, the Russell 2000 will officially be in a bear trend and it could be going much lower. On the Arkk ETF, remember that we are already in a bear market and we already have a very strong bear trend and we haven't made a higher high since February. Arkk is still very weak, but it did close above one of our resistance levels today at 106. We're looking like we're finding resistance at the 13 EMA, and we will still have resistance at 109 and that 20 simple moving average at 112. Remember, in a bear market, a lot of these rallies off of the lows are likely to get sold into and short sold, and eventually they will continue the trend downward. To see Arkk getting back out of this bear trend, we need to get all the way back over the 50 EMA, which is all the way up here at 117. So there is a ton of work for the Arkk ETF before it's going back into a bull trend. So make sure if you're in Arkk that you're either in it for the long haul or you're trading it and you're getting in and out off the support levels. It's still possible Arkk breaks down below support at 97 and goes all the way back into the 80s. So be cautious on Arkk ETF and remember that it is already in a bear market. On the VIX, we dropped over 6.8% today and we saw the VIX closing at 20.7. The VIX closed right back inside that resistance trendline area, but remember the VIX is spiking recently and we are starting to see the VIX building up a bullish trend. So when this happens, it's still completely possible we see volatility come back into the market at the drop of a hat. When the VIX is over 20, you need to be cautious. The VIX is currently sitting at 20.7, and if it spikes from here, we could go back into the mid-20s or possibly even the 30s and see a ton more volatility in this market. So treat the VIX with the respect that it deserves, and right now, as long as the VIX is above 20, you need to remain cautious. If the VIX breaks back down below 20 and starts heading lower, that will be a sign that fear is leaving the market and we then could get more bullish and get ready for possibly seeing all-time highs. But right now we're not quite there yet and we need to take it a day at a time. On gold, we closed right at our price target at $18.77. If we can break above this level, we could get to the next price target at $19.23. Downside support is going to be $18.69 and $18.29. On silver, we broke back down within the resistance trend line and we did find support off that 13 EMA right around 27.4. The breakout level is still right around $28, and on a break of 28, we could get to the price target at 29. Downside support is still going to be right around 27.6 and that 20 simple moving average at 27. On Bitcoin, we're currently up about 10%, trading right around $40,000. Remember that Bitcoin did go into a bear market after that flash crash and after we did find support off that $30,000 level. Now remember, this was a flash crash correction, which does imply that we could continue to go higher now that we've gone through a correction. However, I don't think the correction is over just yet, and I need you to watch very critical resistance levels above at 41,000 and right around 45,000. It's possible Bitcoin goes all the way back up even into the high 40s, but that doesn't mean that the correction is over, and it's still possible we go down for one more leg lower. The most likely scenario is that Bitcoin is going to retest support at that $30,000 level, or likely break through it and go back down for support at 27,000. Now the reason this is because the flash crash was just one of those events that happened very quickly, and a lot of people were taking advantage of that and buying the dip because they knew it was a great trade. Even people that don't typically enjoy trading crypto are still buying that dip because of how easy that money was. However, that is not likely to last, and eventually we will see people profit taking at these resistance levels and we will see the price continue to drift lower. So remember that Bitcoin is in a bear market because the trend is fully stacked to the bear side and there's going to be a lot of downward pressure on the price. So don't just assume that Bitcoin bottomed and it's going right back to all-time highs. We're more than likely going to see a lot of weakness at these resistance levels, and we could see Bitcoin continue to head lower back towards that $30,000 level. So watch the critical resistance levels right around 41,000 and 45,000, and remember we could get all the way back up even to about 48,000 and still go back down and retest that level. So this is going to be one of those markets you just either have to trust and accumulate at these levels and hold it for the long term, or you need to be patient and wait for a bullish rally to return to Bitcoin. Like I said earlier, I don't expect it to be something that we get back to all-time highs in the very near future. This is more than likely going to be a long drawn-out bear market, and it could take us all the way through summer. On Amazon stock, we went up about 0.5% today, and we're still closing below that 50 EMA. We're still holding up above these critical support levels at 3209 and 3138, with critical upside resistance at 3255 and that 20 simple moving average right around 3300. The breakout level on Amazon is right around 3350. And on a break of that level, Amazon will likely start running up towards $3,800. On Tesla stock, we went up over 4% today, and we continue to close over that very critical level of 557. Remember, if Tesla closes below 557, it's time to get out because it's going all the way back down into the 400s. However, don't just assume that 557 is going to break down because it is a very, very strong support level. So you can trade Tesla off of 557, knowing that you want to get out of this trade if it goes below 557 on a daily close. Upside resistance levels are still 594 and 633. Remember, Tesla is in a bear market, so don't get overly confident if it does break down below 557. It's going to likely go down to the next leg lower of support. Next up is Apple stock, which went up over 2% today, and Apple actually looked really good today. It broke out of our downward channel, and it did close above a resistance level at 126. We closed up around 127, but we're still below the 50 EMA at 128. The next step for Apple is to break back above 128 and try to reclaim that resistance level as a newfound support so it can continue to hike higher from here. So watch critical downside support on Apple at 126 and right around 123, and if those levels break down, we're likely going back to 119. The upside resistance levels are 128 and right around 129. On the financial sector, we're basically flat on the day, going up 0.05%, and we're still closing over top of a positive 20 simple moving average, and we're still holding on to the bullish trend. The industrial sector went up about 0.2% today, but it did close back below the 20 simple moving average for the second day in a row. The industrial sector is losing the bullish trend, and it needs to get back over the 20 simple moving average if it's going to try to get back into a bull market. So right now, the industrial sector is starting to show signs of rolling over, and it could come back down and retest the 50 EMA as support. On the healthcare sector, it went up over 1% today, and it's still holding on to the bullish trend. The healthcare sector is looking like it could go back for one leg higher. The energy sector is pretty flat today, going down 0.15% and still holding up above a positive sloping 20 simple moving average and still holding on to the bullish trend. So going back to the S&P 500, you can start seeing a little bit of weakness in some of the sectors. We do see the industrial sector possibly rolling over, but it's way too soon to say for sure. We still see strength in the financials and the energy sector, and we're finally seeing the tech sector starting to bounce today. So remember, this market is definitely looking weaker, and we definitely are losing some of the trending that we had in the past. This is not the time to be getting overly confident in either direction, and I'm talking to both the bears and the bulls. There's a lot of scenarios that could take us to new all-time highs, but there's also a lot of scenarios that could take us to 52-week lows. So be very cautious in this market, and this is not the time to be guessing. We still need to see some very critical price action in the next few days to see where this market's going to go. So believe me when I say that volatility is not out of this market, even though we did have a very bullish day today. It's very quick to turn on a hat and go in the other direction, so you still need to be cautious. Pay attention to the critical support levels that I gave you, and if you see price action breaking below those levels, you will know that we are likely going much lower. Likewise, if you watch the price action I gave you on the critical resistance levels and we start breaking higher, you will know that we could be going back to all-time highs. So watch the VIX and watch the price action, and remember to stay objective and don't have any strong bias in either direction right now because the market is going to remain volatile. Also remember, on the Stocks Channel Discord, I'm bringing you intraday updates and analysis to always help you stay on the right side of this market. I'm also bringing new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.